Hey traders, what's going on? This is Chris at VerrilloTrading. Welcome to the video. In this video, we're going to talk about futures trading. Trading futures with the Interactive Brokers trading service. This, guys, is one of the most highly received questions that I've received on my YouTube channel. Many of you guys ask me, how do you trade futures with Interactive Brokers, or can you do a video showing how to properly set up the bracket orders to trade futures with Interactive Brokers? This is the video for that. I'm going to show you exactly how to do that, but also, guys, I'm going to give you a bonus in this video. I'm also going to describe to you about why I personally do not use Interactive Brokers as my futures trading broker, and hopefully that part of the video could be very informative for new traders, and I could describe to you guys certain technical aspects about the futures trading industry and just how things work. So hopefully you guys enjoy it. If you enjoy it, you can press the like button to show your support, or you can check out the links in the description. So thank you, and let's get on with it right now. On YouTube, this right here is the software called Sierra Chart. It is a very fine piece of software, and it is written all in native C++. It's very fast, very efficient. It doesn't break, and the only way you can break it is if you do crazy stuff like try to code things with while loops in C++. That's how you're going to break stuff a lot faster. If you don't do that, you're going to have a very hard time breaking this software. Anyhow, I use Sierra Chart for my day trading activities and for anything regards to futures trading. Now, I use Interactive Brokers for trading other assets like stock options, US stocks, and for longer term investing positions that I hold. I hold them in an Interactive Brokers account. And as you guys know, I've done a lot of videos on Interactive Brokers. So this is the TWS software, and I'm going to show you guys a basic layout here for futures trading. But before that, I want to discuss to you guys about the simple fact, which is that Interactive Brokers does not offer a very good charting package. And in my opinion, in order to trade futures, and again, you're hearing the perspective of a trader who's traded futures for a long enough time that basically I've developed certain ways of trading and certain custom ways of looking at the market and trading the market that I'm not going to have the same facility and ease of execution that I have, because I've developed a lot of my stuff to be partially automated within Sierra Chart. In reality, they do not have very good charts. The charts are very simplistic. I mean, this is pretty much the most you can get from the chart. And you can also get other sort of studies, technical indicators here. The indicators that I use the most are really not available here. And those things are basically related to price action and volume, live real-time volume data, volume at price data. That is probably the indicator that I use the most in Sierra Chart, which is the volume by price. And I use it in a number of different ways, including on very, very short time frames. I also use it to aggregate volume from multiple symbols and put them into one symbol and have it spit out a value. What I've learned about the volume profile in TWS is that it only displays the volume profile for the current day's price action. I guess for beginners, it's okay because you can use this platform to get accustomed to, placing orders and learning how bracket orders work, transmitting orders, buy stop orders versus buy limit orders, that type of thing, which I'll show you as the video goes on here. In regards to really learning how to trade, like for example, if you asked me the question, hey Chris, can I sit down next to you and watch you trade for 6 months straight and just learn how to trade by watching you? They would be watching me trade on my software and using my custom indicators and custom methods that I've developed over a long period of time. And if they were to start trading after that or while they're learning, they are not going to be using Interactive Brokers because I don't use that in my day trading for a number of reasons that I continue to discuss to you guys here. But for the basics, for learning the basics, I think it's just fine. So for those people who want to use Interactive Brokers for their trading futures, skip to the part in the video where I'm going to start showing it. Okay, so one of the main reasons why most retail traders eventually tend to stray away from Interactive Brokers when it comes to futures trading is because they have a pretty high capital requirement to trade futures. And that, believe it or not, is not a bad thing. It's actually a very good thing. I think that their margins, their capital requirement, is actually quite a good reference. You have to understand Interactive Brokers. Interactive Brokers has been around for quite a while. They were one of the first firms to go electronic from the floor. And basically, they put a strong focus on risk management. I think that their target audience in general is going to be more in the realm of portfolio managers and hedge fund type of trading, where there's a portfolio of stocks and different assets. And if the portfolio manager wants to hedge, they can do so in the futures market. And in that case, the futures are acting as a hedge for the portfolio. And Interactive Brokers offers a special account type for that called a portfolio margin account. And in that type of account, they normally get access to a little bit lower margins as long as those additional positions are acting as a hedge for their underlying positions in their account. To find the margin in Interactive Brokers, it's pretty easy. You need to be connected to a margin account. This will not work if you're on a cash account. And then what you do is in your watch list, you can double click on any symbol. So for example, the symbol ES is the futures contract for the E-mini S&P 500. So I will double click on that, and you can see at the bottom here, it tells us the margin requirement per contract. And that is right around close to the exchange margin. I think it's actually even more than the exchange margin, which is 22,167 US dollars per contract. That's the amount of money you need to have in your account in order to initiate one contract long or one contract short. If you have a conversation with a lot of other futures brokers, they offer something that is a lot lower than that. And that is simply the way it is. They are not targeting day traders. They're targeting more the portfolio manager types and the risk management side from a portfolio management standpoint. That's why I think Interactive Brokers has high margins. Let's double click on MES, and we can see that their margin is right around double the exchange margin. So 2,200 initial margin for micro S&P 500. Again, if money is no object for you and you have a bigger account, and you can go ahead and trade with Interactive Brokers as your broker. And if you do need a better charting package, you can connect your Interactive Brokers account to various other charting software. I can name a few of them. So recently they started supporting TradingView. Now, personally, I believe TradingView is a very retail-oriented platform. And again, it's a software that doesn't really have a lot of the features that I would personally need. At the end of the day, it has the basics. It's a very, user-friendly. It's very easy to work with. For me, it just doesn't cut it, but that's just my opinion, right? Like every trader is different. I prefer to sit there and develop my own way of seeing things rather than, just doing what someone else is telling me or, just doing what everybody else is doing. Because I believe that the markets are in a place now where there's a lot of opportunity to be found if you sit there and look for it and not look where everybody else is looking. That's just my opinion, right? So TradingView is just fine, but I believe it's generally a retail platform, and their volume profiles are not very precise. I mean, they're a little bit precise, but they're not tick-by-tick data, so I don't trust that their data is precise. So I'm not going to trade on a platform that has the potential to have imprecise volume profiles because they are not using tick-by-tick data. Now, Sierra Chart does connect to Interactive Brokers as well. You can connect it. It's not exactly user-friendly, and I do have a video that shows how to connect them, but it's a very sort of basic video. You can connect your Interactive Brokers account, trade on Sierra Chart, and all the algorithms you develop in Sierra Chart, all the custom indicators, can be used to send orders to your Interactive Brokers account. If they work perfectly with other trading services in Sierra, they're going to work fine with Interactive Brokers as well. Right, so that's one other option. If you trade IB and you need more sophisticated tools, you can connect to something like Sierra Chart. Okay, now again, back to Interactive Brokers. Let's keep it basic now, and let's talk only about TWS, and let's show how to trade futures using only TWS right now. So before we get started, there's some important information here about market data. Generally, guys, if you are trading through TWS or in any of the Interactive Brokers trading platforms, you need to subscribe to the live real-time market data with Interactive Brokers, because if you do not have the real-time data in the platform, you're not really going to have very accurate order placement. And you can see this as well when you try to use orders like buy stops. You'll often see that the orders do not populate correctly. That is something very important. Now, if you use a third-party software, depending on the software that you're using to connect to Interactive Brokers, you may or may not have to pay for the market data through them instead. You have to subscribe to the data when you are logged into your live account. That can be done through the client portal, or it can be done through TWS. Then you would go up to account at the top of TWS and select subscribe to market data and research. You cannot subscribe to market data when you are logged into the paper trading account. It has to be in your live account. And when you do that, you're going to have to select the proper exchanges. Now, when you're logged into your live account, you can actually right click on a symbol that you do not have market data for, and it will prompt you here for the market data subscription manager, you can click there and it will link you directly to the subscriptions that are required for that particular symbol. Now, in the case of this example, I'm subscribed to level 1 real-time data for the CME group futures. So that includes symbols like the S&P 500 futures, the NASDAQ, the Russell 2000. But if you look in the watch list, you can see, for example, the 10-year and the 5-year Treasury, as well as the crude oil micro contract here are grayed out because we have not subscribed to real-time data for those ones. So we're receiving delayed quotes, okay? Because these ones trade on a different exchange that is part of the CME group of exchanges, which is the Chicago Board of Trade. Anyhow, that's a different subscription. Okay, for more information about market data, guys, there's another video I did on the channel called How to Subscribe to Market Data with Interactive Brokers. Go and check it out. I'll link to it in the corner or something. So the first thing you need to do, actually, is go up to File, Global Configuration. We're going to go over here and select Presets. Now I'm going to show you how to configure a basic preset. So let's select Futures. And here, this is going to be very important because this is going to be the basis for which your orders will be submitted. So that means your default amount of contracts for every different market that you are trading, and how far away your stop losses and targets will be from your parent order when you choose to submit them. And you can also choose to submit the bracket after you have entered a position or before the order has been filled, and we'll show how to do that. So select Futures here. Now you can see there's a little plus icon right here. That is because I've selected this button right here to create an order preset for a specific symbol. What I've done is I've clicked here and then I've typed in a symbol, like for example, MES. So now I'll click OK, and it says that it's already been defined. I've already defined this symbol, so I'll select OK for now. And I'll show you in the drop down that I created 2 ticker presets. One of them is for the micro S&P 500. The other one is for the micro NASDAQ futures. So I will go and click on the micro S&P 500 right here. These right here are going to be the defaults that will be prompted every time you prompt a brand new order using whichever trading tool that you use in the software. In this case, I'm going to use the chart trader, but everything I show you in this video will also apply to the book trader as well and other trading tools that are supported. So quantity can be 1 contract or however many you want to trade. Generally, you can leave this at 1 and then you can adjust it later if necessary. But if you know already that you're going to be trading minimum 2 or 3 per entry. And again, this will vary depending on how you trade. For example, one trader might want to have 3 entry prices, all with 1 or 2 contracts each, whereas another trader might only have 1 entry point with 3 or 5 contracts on the 1 entry point. So in this case, I'll leave it up to you guys, 1 contract. Now let's scroll down here. This will be the primary order. Now, generally, you don't have to really touch this because we're going to be using 2 different order types to enter a position to trade futures. The first one is going to be a limit order, and the second one is going to be a stop order. Okay, so now if we scroll further down here to our target order and our attached stop order, these are very important right here. So I've chosen in this case to disable them. So we have it set to none, but the offsets for how far away the orders are still being set. So as you can see here, the limit price is configured to be plus or minus 40 ticks away from the parent order. And this will be important when I show you the next step here. The same for the stop here. The stop type is set to none currently, meaning that we are not configuring an attached stop order, but we are configuring the offset for the stop order. In this case, we've configured it to be an offset of 20 ticks away from our parent order. I have not configured anything else. Let's go on and select apply. I just want to show what we've configured for the micro NASDAQ future. So I clicked on the MNQ now. And now look at how these offsets are different. So for the micro NASDAQ contract, I've configured the profit taker to be 100 ticks away and the stop to be 50 ticks away. Whereas with the MES, I've configured the offsets to be slightly smaller. So let's go ahead and show that now on the chart. And I will now show you how to configure these buttons right here. So I've shown you earlier, you need to go to View and then select the Buttons panel. If you activate the chart trader, it can actually show you your existing orders here as well. If you don't use the order management window, they can show here as well. In this case, we don't need that because we have the order management window, so I will just deactivate it for now. So what I'll do with these buttons here is you can click on the little wrench icon to configure, or you can right click on any button and then select configure buttons, and that will bring you to this menu right here. Now, This is where we create new buttons or adjust the existing ones that we have. So let's select to create a new button here. Now, in the first menu here, these are all of the possible functions that you can configure to a button in the chart trader or in the book trader or any other tool in the software that supports these buttons. And you will have to configure them individually for each of those trading tools. So for example, if you configure these buttons on the chart trader, those same buttons are not going to be the exact same way for the book trader. You will have to go and configure them in the book trader if you are using that to trade. So again, here's the list of the functions that you can do. It is up to you to look through them and determine which ones will be important for your trading. In this case, we've just shown the basics, which is buy and sell limit orders, canceling orders, transmitting of the order, buy and sell stop orders, and the attach bracket order function. So for example, that was this one right here, attach bracket orders. I will go ahead and show you what is happening with the individual buttons. So if I select the first button for buy limit, then I click on edit. Here is what is configured for that buy limit button. You can see at the top, it shows the function that is being performed. And then we have the appearance of the button, which we can change the text here as well as the foreground and background color. And then here is where we configure what the button does. As you can see, there is nothing configured here other than the fact that it is just a buy order. The size is set to the default quantity. The order type is a limit, and it is set to be the chart trader price. Nothing else is configured here, not even the stop or target offsets, because we're getting all of those from our order presets that we configured on a ticker to ticker basis, remember from the earlier part in the video. And it's the same exact thing for the sell limit order here. It's just sell limit, chart trader price, nothing configured in the targets and stops. Make sure they're set to none, and all should be fine there. And then for the buy and sell stop orders, it's the exact same thing, except that the order type is set to a stop and the stop price is set to chart trader price. Everything else is not configured. Now you could decide to choose if you want them to always be good till canceled orders. You can specify that here. Or if there is anything specific to the particular button, let's say you're creating a button for a very specific purpose, you could create buttons that submit specific bracket orders as well. In this case, what I did was I configured the offsets in the presets first, and I'm just using the attach bracket order function here to go and get those offsets that I programmed in the presets. So there's a function called configure order presets, which allows you to get into that order presets menu faster than by going to File, Global Configuration. Turn on the buttons by having your chart selected at the top. You need to find the buttons panel and you need to enable that. And that will allow you to have access to these buttons here. And then you can configure these buttons to be whatever you want. And there is a limited amount of functions that are available, but all of the important functions are available. Okay, so now what I'll do is I will select buy limit here. And what this button is configured to do is that when I click on it, it will prompt me on the chart where I would like to place the order. So I will now select that I want to place a limit buy order at this price right here. And you can see that the order has now been prompted. And if we look over in our order management window, our order has not been transmitted instantaneously. That's normally the way I like to do it. And you can transmit it later using the transmit button or an assigned hotkey. Okay, now let's say we wanted to attach a bracket order to this. Remember the offsets we set in our order presets. If we press this button right here, which is configured to attach our attached orders, I will press it and now our attached orders have appeared. And you can see they have appeared with the correct offsets, the ones that we have set in our order presets for this ticker, which were 20 ticks on the downside and 40 ticks on the upside. Now, if we look at the bottom here on our order management window, you can see that the stop order and the limit order are part of the same OCA group, meaning that if one of them fails, the other one will cancel. This is very important and it will protect you from drastic market movements or in the case of you have some sort of disconnection while you are trading. If your stop order were to fill, the limit order will be canceled. That is the way that it always should be. If you guys want more information about that, you should go watch our other video called Why You Need OCO Orders. It's very important. Now, just very quickly, we'll show how we can move these orders. So one way to move them is simply by clicking and dragging on the order itself. So I've clicked on the parent order and I am dragging it up and down the chart, and you can see that the attached orders also move along with it. Now, another thing you can do is you can configure hotkeys for the chart trader, and those hotkeys can be to move the currently selected order one tick up or one tick down. And in that case, I can press a button, and whichever order I am hovering over, in this case, or have most recently selected, will be the order that will be moved when you press that hotkey. So now, if I go down and select that order, you can see that now I can move this order with the hotkey. That is one way of moving individual orders one tick up or one tick down, and that's using a button on the keyboard. And of course, you can also click and drag each order individually. Okay, let's do that one more time. Buy limit order at the price. Now we have our limit order here. Now the reason I've chosen to not attach bracket orders is because let us say we are already in a trade. So let's just enter into a trade, for example. So I'll drag this order up. So what I've done now is I've moved the order up here, and I'm going to select the transmit button. And this is the order confirmation window, and I'll just transmit it right here. You can remove this if you want, but I'll leave it on for now. So now I've transmitted these orders, and if you look at the very bottom left of the screen, we can see that we have a live order here, which is active on Globex at that price of $39.65 and a quarter. Now, the market is last traded at 66.5, so it's not likely that we are going to get a fill around 4 or 5 ticks below unless the market were to drop very quickly, which can happen. So what we will do in this case is I'll just move the parent order up a few ticks and then retransmit it. So now I'm filled on this long trade here. I've been filled at the price of $39.66. I have an attached stop and an attached target in the trade. And now let's say, for example, I want to submit a new order to either reduce my position or add to my position. I can simply do so by selecting either the buy limit or the sell limit buttons. In the case where you had the bracket order pre-configured, every time you would submit a new order like this, you would have new attached orders that would appear along with that order, and that is not necessarily what you want. Okay, so I've transmitted a second buy order and I've been filled again, so now I'm in a long trade of 2 contracts. Now let's say, for example, I wanted to get out of this trade. One way would be to either drag one of these orders, but if I were to drag one of these orders closer to the price, since these orders are only 1 contract each, I would only be selling half of my trade rather than the entire thing. So if you wanted to close your entire trade, that might not be ideal. Another way to do it would be to select the close position button. And what that would do is it would cancel off your attached orders and submit a brand new sell limit order for your position quantity. However, this order has not yet been transmitted, but you can see that it is right there. So I'll transmit it right now. And now we have an active sell limit order here to close our position of 2 contracts. And I can move it down by a few ticks and then update it here.
Order filled.
And now the order has been filled and our position has been closed. So that would be the first method for entering and exiting trades, which would be setting buy limit and sell limit orders of where you want to enter and exit trades. So in this case, I've set a sell limit order at this price. Now let's say, for example, I wanted to modify the price of that order. I can also do so here in our order management window. And I can just simply type in the new price there. So let's say I wanted to move it up to $39.80. I would type $39.80 there, or just simply highlight the last few digits of it and replace them with an 80, and then retransmit the order. And you can see that our order has now been transmitted at the new price of $39.80. And now, depending on how you modify the order, it can transmit itself immediately. So for example, if I use the move an order 1 tick up and down hotkey, you can see that the modification does not transmit itself, and it actually, you have to transmit it in order for that to be transmitted. But if I click and drag on the order on the chart, then the modification happens. It transmits that order. Also, if I go ahead and change the price of the order here in the order management window, I will need to retransmit that order at the new price. So there's a bit of a discrepancy there depending on what method you use to modify the order. I would recommend doing it in the order management window. It just is a little bit simpler. So now we are filled on this position here, and we can see that we have an existing position of long 3 contracts at the price of $39.84.864. If anyone is wondering about the specification of the decimal point here, that is because every time you enter a trade using IB and TWS, it is automatically calculating your commission paid into that. Okay, so let's go over here to our monitor and select the portfolio tab. Now over here we can see any balances in our account. And we can see that we have an existing trade here of 3 contracts on the micro S&P 500 futures. Now, if we right click on this trade here, or this existing position, there's going to be a few options we can select. If we select trade, the trade menu, there's going to be some options here we can choose regarding closing a percentage of our existing position. Now, this was shown in another video I did called How to Scale Out of a Trade in TWS, but you can do it here as well. So let's say I select create a target and stop exit bracket. This will be the option that you need to select in order to submit a bracket order to a position in your account. So when we have this open, we can see the quote of the market here at the top of the screen, and then we need to configure some parameters here for a profit taker and a stop loss order. We can see our average price is 984 and something. So I will go ahead and select the stop loss price in this case, and I will just simply put it a little bit lower than where the market is trading in this case, and which means that it will probably trigger fast. So now we have our stop loss price and our target price configured here. Both of these orders in this case are a good till canceled order, meaning that in the case that we wanted to hold a trade with these bracket orders after the market is closed after 5 p.m. Eastern, our orders would still be with our broker on the servers, and they would be resubmitted when the market opens again. So I will now click preview orders, and here's our bracket order, and I will transmit that. Now, once we've transmitted them, we can see this message, which you will see if you have any outstanding orders or outstanding bracket orders. You will see this message if you try to submit a new bracket order. You're going to get that message. And in this case, what has happened is our stop loss has been filled because the market moved down and filled our stop loss because it was at a price of 83 1/4. And we sold 3 of them. You can see at the very bottom of the screen there. Now, I will show you guys one more example of attaching a bracket order to an existing trade. I will enter into a short position just to show. So now I'm in a short position of 3 contracts. We can see our existing position here in the portfolio window. And now if I right click on that, we can select the option to create target and stop exit bracket. We just need to configure the limit price and our stop price. So since this is a short trade, the stop price is going to be higher than where the market is currently trading. So I will set it up at 79 in this example. And I will set the limit profit taker price lower than where the market is trading, somewhere around 71. And now I will preview these orders. Here's our order preview, and I will transmit that now. Okay, so now that our orders have been submitted, we can see how they are live on the chart. Now in this case, it looks as though the market is approaching our stop loss order, so that will probably be the one that is filled first. In this case, our stop loss has been filled because we put it pretty close to where the market was trading. So that was just an example of how to attach a bracket to an existing trade. Now, as you can see, when one of the orders fills, the other one is canceled, and that is very important, especially if you are not at your desk and you're not there to monitor the market at all times. Because in the case that the market moves very drastically, if you are not using OCO orders, what can actually happen is one of your orders fills, the market reverses, and the other order fills, and you ended up in a trade that you didn't want to be in. Okay, let's show another method of entering a trade. Now, many traders, they enter with stop orders, and this would be in the case where you want to enter into a long trade when the market has achieved a certain price higher than where it is trading. So for example, let's say when the market gets to 39.75, I want to buy. So what I will do is select this button right here for buy stop, and I will now go on to my chart and find that price. Now, I haven't been able to do this, honestly, which is to have the buy stop work with the chart trader price. So what you'll do in this case is you can see that the buy stop has appeared at the incorrect price. You can simply drag on it until you get it to the correct price. What I would normally do is prompt the order on the chart and then go ahead and change the order price in the order management window. Okay, so now that we have this order here, that buy stop is there, we can also submit bracket orders that are associated with that buy stop, which will protect us if our trade is filled and the market goes in our favor. We can take a profit or against us. So I've selected the button to attach the bracket orders, and these are fully server-side bracket orders, meaning that when our order is transmitted here and pending, we can be disconnected and our attached stop here will still be there on the server. All these orders are server-side. Okay, so I will just move that order slightly, and now I will transmit all 3 of these orders by pressing my hotkey, which is set to Shift T. Now I've transmitted that, and what we have here is a buy stop order. So what will happen is if the market moved up to 39.75 and it traded at 39.75, it would trigger a buy market order, and we would essentially be buying the ask at whatever the asking price is at the moment that the last traded price is 39.75. It's probably going to be triggered at 39.75 simply because the S&P 500 market is a highly liquid market. Since this market generally has more than one contract at every bid and offer, you will most probably be filled at 39.75 unless the entire offer would be pulled away and nothing actually ends up trading at 39.75. In that case, you'll end up trading at the next price. Now, the reason why Interactive Brokers always prompts you and warns you about stop orders is because most of you guys are trading in very thin markets like options where the bid-ask spread is wider than one tick, or certain high volatile stocks, and that's the same case. Whereas with futures contracts, like highly liquid contracts like the S&P 500 or the 10-year or 5-year Treasury note, those markets have a lot of contracts at every single price bid and ask. So stop orders generally do not experience slippage, but of course there's exceptions to that as well. So if you were to trade, for example, NASDAQ futures or even S&P 500 futures when the market gets very volatile, in those cases, if you are using a stop order to enter a trade, you might want to convert this to a stop limit order and have it work with an offset of around 2 or 3 ticks to ensure that you don't get slipped by more than 2 or 3 ticks, for example, okay? Now, some traders ask questions about what is the appropriate order types to be using for trading futures. This is a great question. In my opinion, when it comes to stop loss orders, normally on most markets, you're going to use a regular stop order. Different traders have different preferences, but one thing you need to understand is that if you're using different types of algorithmic ways and client-side conditions to execute orders, especially if you're using third-party software, most of the time those conditions will not be server-side. So if you do lose connectivity while you are relying on client-side conditions to execute orders, that will most probably not work in the case of a loss of connectivity. Now, that is why generally when it comes to protection in a trade, stop loss orders, you can use regular stop orders and they are just fine. Now, of course, there are some exceptions to that. If you're doing very sort of precise, more nuanced style of trading, then in that case, there's other alternatives. One of my favorite order types is the bid-ask quantity triggered stop. But when it comes to, just managing your positions in a general way and also having the most amount of protection possible, a stop order is going to be the #1 option. Now, when it comes to profit taking, limit orders are also just fine. You don't have to really mess around with those relative orders or other order types. If you were to ask me what order type do I use as a stop order when trading the S&P 500 or the NASDAQ futures, I would use a regular stop order that has a trail associated with it, and the trail will be programmed discretionary or based on volatility. Okay, so I hope this video helped you guys. Thank you for watching, and if you enjoyed it, let us know in the comments down below and press the like button. Thank you for watching. Take care.